Hi everyone, this is Dave from Mountbatten Estates. Today we've actually got Brett Valin from a company called Sandcastle NFT Club. I'm really excited about this because, as you know, the whole purpose we're steering, the interviews these days are based on NFT, the Metaverse, cryptocurrency, and there is a huge amount of changes happening right now within this whole kind of digital space. And Brett is right at the forefront of what's going on. So I'm really excited to have Brett on today, get some really good content from him, share his ideas and his thoughts, where all this is going, and hopefully try and educate us along the way. So Brett, please introduce yourself and tell us a little bit about yourself.
Absolutely, Dave. First and foremost, it's a pleasure to be on today. Thank you for the invite. My name is Brett. As you just said, we are running a new project called Sandcastle NFTs. My background really comes from a more traditional finance perspective. I was a financial advisor for a few years. I do have a real estate company with the buy and hold strategy long term. We have properties up in the Midwest of the United States. We have a property down here in Tampa. So what we're trying to do is bring more of a traditional finance perspective into the new age of cryptocurrencies, NFTs. That's at a high level what Sandcastle NFT Club is aiming to do. We'll get into more details a little bit later in the conversation, but thank you again for having me on.
Brilliant. So Brett, tell us how long has Sandcastle been going, and what kind of projects have you been working on and maybe working on right now?
Absolutely. So the project is in its infancy stage currently. The idea was hatched a little less than a year ago between a business partner and I, who actually went to college together up in Chicago. We've stayed in touch throughout the years. We've always been entrepreneurial in spirit, and this has been a fantastic way for him and I to work together. Projects that we're working on right now, we're actually gearing up for our first minting. We're going to be later this week. Which is for the people that are a little bit less educated in the space, that is essentially doing our IPO. So what we're going to be doing is releasing our first rounds of NFTs to the public in a way to gain capital, to bring on capital to the project. We're going to be reinvesting that capital in all sorts of different projects going forward.
You've obviously mentioned minting, IPO, that would be the equivalent. What kind of thought process did you have around choosing a type of NFT that you want to bring to the market?
Yeah, that's an excellent question. And that seems to be the big question that everyone's doing, right? Because NFTs right now are very hot. Some projects are hype-based, where they're based on expensive advertising budgets and bringing out the biggest, best influencers. And some are a little bit more slow-paced, and they're based on asset-backed securities in a sense of what Sandcastle NFTs is doing. I'm not here to tell you what the new best project is going to be or where to put your money, but it does make sense to do your research. It makes sense to look at the websites, look at the Discord channels that people are talking on. Make sure that you're doing your research of what that company is standing for, what that company is aiming to do. Some of these projects coming out right now are aiming to be a quick flip. They're aiming to be, you want to buy it on a Thursday and sell it on next Monday and move on with your life. Some projects are based on growth over time and putting back money into their community. So do your research.
You've touched on something quite apt there, which I guess maybe NFTs and cryptocurrency are quite alike in some instances. Why? Because like some cryptos, they don't have a utility behind them. They're just meme coins. They're just hyped, one pump and dump. And if you're not careful, you could probably align yourself with some of this within the NFT world as well right now, where you've got these influencers, haven't you? You've got these very big marketing budgets that people are just branding all over social media, hyping it all up, and then it's just like a pump and dump, isn't it?
You're 100% correct, yes. And that's something that we over here are making a stand to say that we're not doing that route. We actually are, in terms of utility that you just mentioned, our NFT, all the capital that we're going to be bringing on through our minting, through our IPO, over 90% of it is going to be reinvested back into the project in various investments.
Amazing. So tell us a little bit, I mean, you've touched a little bit on NFTs, but why do they actually have a value? What makes them, so interesting right now compared to, say, other type of asset classes?
Wow, we could talk about that for an hour. It's really interesting how they're valued because it is very intrinsic how these assets are being backed. So it's worth what people will pay for it. It's worth what the community decides that it's worth, right? So we can quote much larger projects like the Bored Ape Yacht Club, which seems to be making headlines across the world. The value of that community is the community. And they've done an incredible job of putting some of the biggest names in Hollywood, the biggest CEOs, the biggest business heads in the world are in this community. So for me as an entrepreneur, if I want to meet Oprah Winfrey, I can go buy a Bored Ape Yacht Club NFT and I can go be invited to the party that she's at. Or if I want to meet Eminem or a crazy artist or celebrity, I have access to that person through an acquisition of an NFT. So in that sense, in the NFT in the Bored Ape Yacht Club theme, those are actually tickets. They're membership items. The same way that you would buy a ticket to the Super Bowl, the same way that you would buy a ticket to the FIFA World Championship, right? So that's the value of that based on the community itself. Other projects are going to be based on what they give back to the community. So a lot of these projects are trading on OpenSea, and they're taking those fees and they're giving them back to their community in the form of giveaways or prizes or Oculus headsets, trips to Florida, whatever it might be. They're giving away back capital. So in essence, it's backed by some sort of cash flow, some sort of business, in the same way that you would value, Apple or Facebook or Amazon based on how much cash flow brings in and what your expected return is. You value that company based on outstanding shares.
You've touched on something really interesting there, because you've touched on these kind of exclusive clubs. And I read something recently that there is a well-known chef in America who is currently in New York looking for a premises, and is going to have 5 or 6 exclusive restaurants within this building. And you have to have an NFT or a certain type of NFT to access the building, and then also access these different restaurants within, because each restaurant will be a little bit more exclusive. So it buys you these kind of exclusive experiences and memberships that you just normally wouldn't be able to ascertain anywhere else.
It's brilliant. It's a brilliant business model. And it's basically the same as having an in-person ticket, but it's transferable from across the globe and in an instant. The blockchain technology, and just to backtrack just slightly, NFTs it's the future of transactions. It's the future of sporting events. It's the future of anything, transactions in terms of real estate, buying and selling property will be on the blockchain at some point in the future. Bringing it back to your chef example in New York, it's a brilliant business model that someone living in London who's going to be in New York for a weekend can buy an NFT before they get there. They have access to the top restaurant in New York, no waiting list because they have that ticket to walk right in. And then when they go back home, they just sell their NFT and move on. It's an incredible perspective on an older adage of membership and exclusivity that typically has to do with you and your personal clout, your personal fame. You can buy and sell that over the internet on the blockchain. It's incredible.
So is this why NFTs and cryptocurrency are so well connected, would you say? They're sharing, the majority, if not nearly all, of this technology.
Absolutely, yeah. And for anyone that's still looking to get more educated in the space, in my opinion, NFTs are built on a foundation of cryptocurrency. They transact very similarly to cryptocurrency, and a lot of the major NFTs out right now are actually backed by the Ethereum blockchain, which means that they transact in terms of Ethereum based on their prices. And they also use the blockchain associated with Ethereum to transact. There are other NFT blockchains that exist that seem to be doing fairly well, but Ethereum has most of the market share there.
Brilliant. Would you say there's any kind of questions that still remain about NFTs or concerns people have with right now? I mean, I know security is quite a big thing.
Security is huge. And questions are going to be popping up as the space expands, right? The space is nowhere near being done in terms of its technology, in terms of its expansion. So questions will continue to come up. The major one that we see right now is security-based. The lack of regulation in the space is both opportunistic and a little bit scary all at the same time, right? So the lack of regulation is how you can see some of these projects go from $1,000 to $100,000 in the course of months, which is something that you really don't get in a regulated market, or the traditional exchanges that we see from the New York Stock Exchange, et cetera. But that lack of regulation also means that if you're not careful, if you're not doing things correctly in terms of opening up your digital wallet, in terms of security, hot wallets versus cold wallets, which we can get into as well, you are opening yourself up to risk. There are people out there that do know the space very well. And if you give them an opportunity to steal your assets, they will.
Too often I hear many stories of people having their wallets emptied out. I mean, the only sure way of protecting that is to try and come off, come onto like a hard wallet, completely, and come off the internet.
Correct. Yeah. And it does add a little bit of a nuance to the space of educating yourself in all these different ways to protect your money. But yes, the number one way that we've seen to completely protect your assets is to make sure that you're putting that cryptocurrency, those NFTs, those assets onto a cold wallet that you can actually walk around with, just like a flash drive or a hard drive. And it's not tethered to any internet connection. It's not any, so then when you want to access it, you have to find a computer and plug it in, which adds an extra step. But in terms of security, it's the number one way right now to protect your assets.
So let's talk a little bit about real estate. So how are people actually making money within this whole online metaverse stroke real estate world? How are people doing it? Why are people doing it? And let's talk about maybe who's in that space and what they're actually doing. So I'd like a lot of people who are actually watching this for the first time have no idea that you can actually make money within this whole world. It's the first time they're actually hearing this. So let's delve a little bit into who's doing what, how are they doing it, and why are they doing it?
This is one of my favorite topics right now. I'm so glad that you asked this question, because I get so excited talking about real estate in general and then NFTs in general, but then merging the two and marrying them is such an exciting topic. So digital real estate acts very similarly to in real life real estate, the same way that you can buy or sell a property in a downtown metropolitan area. You can do the same thing in the metaverse. So think of different metaverses as potentially different countries around the world, and you're picking your area based on the same characteristics that you would base a purchase on regular in real life real estate, right? So location is super important. Where are you located? Who are you next to? How big is your property? What can you do there? The regulations of each individual area. So I'll give you an example of the Sandbox Metaverse, which is what our company is associating with. They're doing some incredible things in terms of who they're bringing on board, how they're divvying up properties, how they're giving back to their community, and where their timeline is really going towards. So in terms of real estate, buying and selling it works the same way. You set up your digital wallet, you convert money into whatever currency you want, typically Ethereum, and you would go and buy a property in, let's say, the Sandbox, and it's going to appreciate as more people enter that space. The same way that buying real estate in New York in the 1800s, before it really became the New York City that we all know, buying up land was relatively cheap, relatively inexpensive, but you were buying it with really not much around you. There was no convenience stores. There was no grocery store down the street, but you're buying it based on the opportunity that there will be, and we all know what's going to happen next. Getting a little bit of a layer deep, if you want to, there's other opportunities to buy real estate in the metaverse, and you can actually, there's companies out there that will loan you money based on the value of your real estate, the same way that I can go to a mortgage lending company and they'll appraise my property, give me money based on the value of that, and I will pay interest on that loan. So it's very quickly becoming synonymous with the traditional real estate market.
Amazing. What kind of cost would you say typically is someone looking to explore this for the first time, what kind of money would they be looking at typically spending for a typical house within, say, the metaverse?
That's an excellent question. So there's so many different options that you can go to, the same way that you can go get a property in the middle of nowhere for relatively cheap versus some of these metaverses that are a little bit more established and a little bit harder to come by. They will be much more expensive. So in the sandbox, we've seen properties, plots of land that are 10 parcels by 12 parcels big. They're very large parcels, going for upwards of $800,000, $900,000.
Wow.
But if you wanted to get an individual plot of land, you're looking at more like $3,000 to $5,000, somewhere in that range.
And obviously, if you're next to a celebrity like P. Diddy or someone like that, then you could be talking hundreds of thousands, if not millions.
Absolutely, 100%.
I have mentioned this in a previous talk, but I know Snoop Dogg's really big in this. He's been promoting this for a little while, and he's got his houses and he's got his pads, and people are actually fighting over themselves to be able to actually say that they live next to Snoop within this whole digital real estate world. It's crazy when you think about it.
It really is. And if you think back about going back to the traditional real estate model, it's the exact same way, right? You put the London, UK real estate market, you want to be as close to downtown as you can. That's where all the people work. That's where everyone plays. That's where everyone eats. So the closer you can get to that, the more access you have to that. You have more financial opportunity in terms of renting residential. You have more opportunity in terms of billboards for advertising. You have more opportunity for foot traffic for your restaurant. Everything is more expensive by the hubs of the real estate. So Snoop Dogg is positioning himself very well in the space, but yeah, everyone wants to be close to him because they know that his plots of land, his real estate has a lot of traffic, and everybody wants to be close to traffic the same way that you want to be close to traffic in traditional real estate.
Brilliant. So, which I'm really keen to explore and maybe to educate a few people watching this today on what are the steps that we need to do in order to try. I mean, say we've got an interest in this today. What would we need to do right now in order to set this up? Where do we go? What accounts do we need to set up? Who do we need to align ourselves with? And just maybe talk through the steps involved with that.
Yes. So it's a similar process to opening up a brokerage account when you're opening up a traditional finance portfolio. In the same way that you would go to an E-Trade or a Scottrade to open up your investment portfolio, what we would typically do is go to a company called Coinbase. There's a couple of other companies. Coinbase seems to be the one that's taking over currently. And you're going to set up an account the same way you would set up any other investment account. They're going to ask for your information. Who are you? Some general personal information. And then you get to pair that account with a checking account or a savings account, and you deposit money. You transact that money into a cryptocurrency, typically Ethereum or Bitcoin, excuse me, that has most of the market share. From there, it gets a little bit more in depth. So from there, you'd have to open up a second wallet. Typically, in terms of a MetaMask wallet, again, there are other competitors, but that's the main one online right now. The MetaMask wallet is great because it actually allows you to hold NFTs on top of cryptocurrency. So set up a MetaMask wallet, move some of the money from the Coinbase account to your MetaMask wallet, and you're good to go. From there, any of these NFT projects, when you go to buy them, before you can purchase the NFT, it will say, pair your MetaMask wallet. It'll put it right on the screen for you. Put in your MetaMask information. That way, when you go to transact and buy that NFT, it drops it right into your MetaMask wallet. You don't even have to think about it.
When you buy this, so to say we're actually now we're on the hunt. We're looking for a piece of land that we can afford. We found something nice. Is there a certificate or something that you actually get when you buy the land? How where's the kind of proof of purchase? I guess how does that work?
Proof of purchase is on the blockchain, same way that you would buy and sell cryptocurrency. It's in your wallet in the form of a deed essentially. So your NFT is your proof of purchase. It's your deed to the property. You own it. The same way that when you go to sell it, you would move that NFT to another person's wallet in exchange for the appraised value, in essence. So that would be your proof of purchase. Go ahead.
If we're not maybe thinking along the lines of spending hundreds of thousands, but we've got maybe a few thousand to play with, what would you say typically? What kind of a return would you be expecting over what time period for if you were to maybe put a few thousand towards this? What how long period? What kind of return? Trying to build up a mental picture of how to manage my expectations with spending say $5,000.
Yeah, expectations are all over the place. This is one of the most volatile markets that we've seen in decades, and it's incredibly opportunistic. But the same way that if you're following the markets, cryptocurrency is down a considerable amount this year, based on a few factors that we can get into if you want to. But you're expected to, getting into the cryptocurrency, getting into the metaverse NFT space, you're expected to ride the waves. So if you put in $5,000, if you had done that a few months ago, your $5,000 would be worth about $2,500. It's down a lot. But you'd also expect that as this rebounds, we're going to see tremendous returns, and you should be doubling or tripling your capital over a year or so. We've seen, Bitcoin is everyone. That's the main cryptocurrency. We've seen Bitcoin go from 19,000 to 4,000 and then to 60,000. So if you're going to get into this cryptocurrency space, you should be expected to ride the waves and not freak out when things happen. But you should absolutely be expecting substantial returns in the forms of multiplying your money 2 to 3 times as that wave corrects and begins to build back up.
You've mentioned, risk and holding your nerve and trying to buy at the right time. I know we will delve a little bit into this in terms of the cryptocurrency because I do follow it quite actively, and I'm involved in that space already. You're right. The returns have probably halved, I would say, across the board. If you look at Bitcoin and Ethereum and all the rest,
right.
If you're a trader and you're kind of basing it off like a Fibonacci retracement, that's a 50% retracement, which is normally a good sign of a potential area where it might actually rebound from. Do we think it could go any more? Potentially, yes. Is it potentially a good time to try and get involved with cryptocurrency? Yeah, definitely. You're not buying at the top of the market, which you never want to be. We have seen 50% fall. So if anything, you want to be really kind of keeping your eye on the whole crypto space right now, because anywhere around this time, I'm not saying right now, maybe it could be a few weeks or a few months from now, but anywhere around these levels, you have to admit, they're not a bad place to be buying, considering we know the potential of where this was only just a few months ago.
Absolutely. And what we're seeing right now is a little bit of consolidation around this price point. It could, to your exact point, it could go a little bit lower. It could swing back up. But consolidation is good. This means that a lot of people are deciding that this price point seems to be where everyone agrees that it should be trading right now before it makes its next move up. So what we're going to see next is people are going to start purchasing back this cryptocurrency, and we're going to be seeing some inflection in what I'm losing my train of thought. I apologize. We should be seeing an increase in consumer optimism, and as it begins to come up, people will try to ride that wave. What we recommend, and I say we recommend, I'm not a financial advisor anymore. We don't make decisions like this. But dollar cost averaging seems to be the best way to time that bottom of the market. If you have, let's say, $10,000 to be putting into cryptocurrency, I wouldn't drop it in all at one time. I would say this seems to be consolidation that makes sense. I'm going to put in a couple of $1,000s, and every week or 2 weeks, I'm going to drop in a little bit more. So what that means is you're taking risk off the table. You're saying, I'm not going to put it all in right now because it could go lower. But at the same time, if it does go lower, I'm going to catch that bottom much more appropriately. And I might miss out on a little bit. Maybe this is the exact bottom. Maybe I missed it with all my money, but I can still put it in as it's going up. Then I'm going to catch that wave as well. It's a great way to take risk off the table while still being invested.
Do you know what? I genuinely love that model. Why? Because I've done it myself. If it goes down slightly more, all you do want to do is buy a little bit. It's never going to go to the bottom, is it really? Let's be frank. But if it goes down a little bit more, you're only going to buy more when it drops, and you're actually going to bring your average down, which means that your break even is going to be a lot sooner than from the first price point you bought. That's if it goes the wrong way. But if it goes the right way, you've called the bottom of the market and you're just averaging up, and it's going in the right direction anyway, which you want to be buying. So you can't lose by doing that strategy. You're either going to be averaging
100%.
slightly or buying into a rising market, which is only going to increase your bottom line. So yeah, 100%. I love that idea, Brett. I think I've taken up enough of your time. I've got so much value out of this. I genuinely, really enjoyed our talk today. Brett, tell me who you're looking to ideally connect with today, and I'll make sure that we're going to send people in your direction.
Yeah, absolutely. So Sandcastle NFT Club really is attacking the metaverse real estate market the same way that we've just been talking about for the past 15, 20 minutes on what that really entails. We touched on a couple of points where getting into the metaverse real estate market can be a daunting task. It can be a little bit expensive depending on where you're trying to be. So what we're trying to do at Sandcastle NFT Club is that we're actually trying to give access and opportunity to people that may otherwise not have been able to get access to. Who we're trying to get involved with are people that are more traditionally finance-based. They understand how markets work, but they want to get into this new exciting era. They don't want to go in with both feet. They want to test the waters a little bit. What they can do with us is essentially the same way that you would purchase a REIT in traditional finance. You want to have access to the Los Angeles, California real estate market. You don't have $1 million to buy a 4-unit apartment building. You want to be exposed to that reward, but you don't have the capital. What can you do? You buy a share of a company that's already doing that. So the Sandcastle NFT Club, what we're doing is going to be investing in properties in the Sandbox Metaverse. We're going to be giving ownership back to our community members in the forms of NFTs. In essence, that's the same way as buying a share of a REIT in traditional finance. So who we're looking to get to is people that want to get involved in the metaverse. They want to get involved in real estate. They don't want to do all the research. They don't have all the time and money to go buy a bunch of it. They want to dip their toe in the water. That's who we're looking to get involved with. That's what we're aiming to start with. We will be growing and getting into larger and larger acquisition deals, but that is where we're at today.
Amazing. Brett, thank you so much. Really interesting having you on today, getting a really comprehensive education on everything from crypto and real estate and NFTs. So amazing. I'd love to have you back on again in the future. Hopefully you'd be okay with that. And I'll make sure that, Brett, all your details are actually under this video. And hopefully we've shared some good content today that people really appreciate. So thank you so much for
absolutely
being with us today, guys.
Thank you so much for having me, Dave. It's been a pleasure.
Oh, amazing. Thank you, Brett. Guys, thank you so much for tuning in and watching this. As always, feel free to reach out to myself or Brett if you've got any questions. And this is a series that we're actually going to be doing, educating people on this whole new digital real estate and how you can be part of it. And feel free to reach out to any one of us if you've got any questions. So thank you, Brett. Thanks everyone for tuning in, and look forward to speaking to everyone again and seeing everyone again very soon. Thanks, guys. Best of luck.